Hello and welcome to another week in the investment world. Really want to talk about now healthcare on the global scale. It's a very interesting sort of scenario with the volatility that we've seen sort of coming into markets over the last couple of weeks. You're also now talking about global growth and where that growth is translating and who's picking up on that kind of material and which sectors in those spaces are actually the ones to be looking at. Let's narrow it down. Let's look at the US, let's look at Europe. Also, let's look here in Australia and sort of compare the healthcare industries that they have and what exactly inside of them are actually more attractive or in some scenarios less attractive than others. Starting probably with the least attractive market out of all, and that's Europe. And the reason for it, Europe's had some structural headwinds around their current markets. If you have a look at where they've been going, particularly over the last 5 years, Euro stocks, if you have a look at them, their healthcare sector is only up around about 23% in the last 5 years, and last year it was only up around about 2%. There is a lot of current regulation sitting in front of the EU Parliament. There's a lot of regulation coming out also from not just from Brussels, but individually through the countries, and therefore that feeds through into the numbers. There's still a very good upside, and they are coming from a very low base. Europe is going through a renaissance, and that is certainly something that you may want to be exposed to. But if you have a look at the performance of their healthcare sector, it is a little bit underwhelming, and that may be a way of looking at that area. So let's look at the two that really matter, and that's the US and us here in Australia. I want to also divide the US up into two spaces. One in healthcare, their traditional long-term health plays that you probably all well and know, and then also their biotech space. Here in Australia, unfortunately, we don't have that kind of diversification. We don't have a health industry that is as large as the biotech industry in the US, but our health space is certainly very attractive. So looking at that and just going through the earnings season that's just been, it was really, really strong. Admittedly, one major company, in fact our largest listing in the healthcare space, had an absolute stellar quarter and an absolute stellar half and full year numbers came out on the back of it, which did see it beat expectations by 9%, really ratcheted it up. What's very exciting about that space particularly as well is the amount of money they're spending on research and development. It's around about 645 mil to 650 mil. That's a real good amount of organic growth coming out of that part of the world, and it is in pharmaceuticals and in blood products. The other side, things like particularly private health and private insurance wasn't that strong, but overall, if you look at our healthcare market, it is incredibly strong and it does get through the volatility. It's up over 180% in the last 5 years. It was up well and truly over 25% last year. It is more stable. The PE ratios are a little bit lower. They are quite a sustained looking business, and they're not just Australian exposed. They do tend to have a European and US footprint if you do look at the larger end of sight. So that brings me to the next part, which is the US. The US healthcare has been slightly disappointing, and that's because their bigger end of town have had, again, some slightly weaker than expected quarters. They do also cross over into not just health products, but also into probably day-to-day products as well. And you can look at your likes of your Johnsons & Johnsons, and that's possibly all side into it as well. Longer term, they've done very well, not as well as the Australian market, even on a common base with the currency denoted in US dollars. Their healthcare space is a little bit behind. It's down by roughly around about sort of 15% on the ASX's listed healthcare space. But in saying that, the stability is there. Looking at the biotech space, that is a more exciting area. It's up 185% over the last 5 years. It is clearly driven by the demand for growth product, its demand for also innovation. That is clear in what's coming out in the numbers that you get from the US tech, particularly their biotech space. Innovation is absolutely core to it. It does come with a caveat, and if you have a look at the chart on screen, it does have a lot of volatility inside of it, and you can see it moves quite strongly in both up and down directions. It has also had some slight geopolitical influence onto it over the last couple of years, particularly back in November, where the president himself did highlight that he was talking about the out of control, his words, sort of pricey that comes in that space. But biotech is certainly the most exciting. It certainly has the most upside in growth, but it also has risk on the downside. All in all, looking at that, probably the best way to look at it is if current conditions sustain and there's low geopolitical input, the upside in all three of the spaces from the US and also here in Australia look good. Downside, geopolitical increases ramp up. You also see the possibility of conditions slightly changing, become a little bit more defensive, profit taking and move away. So that is probably the way that the investment world sits at it. With that over and all, having a look at the sort of through the markets and looking at it from a fundamental basis, Australia still looks quite good as well.